This Nonprofit Basics episode is intended to help a founder of a new charity to navigate the complex rules that describe a public charity. Many people think that the designation 501c3 means an organization is a charity, but there's more to it than that. Today, we'll talk about the IRS classifications that distinguish between a public charity and a private foundation. We'll talk about the 4 basic paths to public charity status and try to dispel some of the mysteries surrounding what it means to be recognized by the Internal Revenue Service as a public charity. Then we'll close with some tips for a new organization that intends to qualify for public charity status based on fundraising from the public, or alternatively, primarily from generating income from their exempt function. Welcome to the EO Radio Show, your nonprofit legal resource, brought to you by the Exempt Organizations Group at Farella, Braun & Martel. My name is Cynthia Rowland, and I'm a partner at Farella. I'm a business and tax lawyer with more than 30 years of experience advising clients on nonprofit and charity law. Through this podcast, our lawyers and guests will discuss a range of legal and business issues impacting the nonprofit world because we understand you work hard every day to make your community a better place to live and do business. Many of our programs focus on the basics, and at times we'll do a deep dive into narrow and complicated legal issues. Again, welcome to the EO Radio Show. We're glad you're here. Public charity status can be achieved in several different ways. When Congress wrote the rules that differentiate between private foundations and public charities in the late 60s, their goal was to distinguish between privately controlled foundations, which it believed to require stringent oversight and less favorable contribution deduction limits for the donors, from public charities, which, by virtue of responsiveness to the public, were deemed not to require such oversight. The statute and related regs are an extraordinarily complex set of rules for ensuring that the organization will be responsive to the public, thereby satisfying policy objectives of Congress. By way of background, it's really important when setting up a new organization that there's a trap for the unwary in filing the Form 1023-EZ, where the new charity applies for its exempt status. It's really important not to list the new organization as a private foundation unless the person drafting the application really knows what that means. So what I'm going to try to achieve in talking through these issues in this episode is to help the organizer to understand the distinctions. So this gets fairly technical, but bear with me. I think by the end, you'll understand the distinction. An organization that's charitable in purpose, even if funded from just one donor, is entitled to be recognized as an organization described in 501c3. But to be classified as a private foundation means a whole slew of onerous limitations apply. Many founders want and need to raise money from the public, and so when applying to the IRS for their initial determination letter, they're faced with the question of which type of publicly supported organization they intend to be. It's not always easy to know which one to choose when setting up the organization. So here's the basic rules. There are 4 paths to public charity status for a new organization. First, there are certain types of charities that are categorically described as public charities in the Internal Revenue Code. These are churches, schools, hospitals, and certain governmental units. These entities don't need to run through any mathematical support test of any kind, and if they meet the criteria for the type of charitable organization, that is, they're classified as a public charity based on their type of operations, it doesn't matter how their financial support is achieved. Then the second path. There are organizations as charities that are organized to support other public charities. These are referred to as supporting organizations. These kinds of organizations may have a base of support that's too narrow to meet the mathematical support tests we'll talk about in a few minutes. This kind of charity, which has a specific type of control relationship with another public charity, is also allowed to be treated the same as a public charity for purposes of these complicated tax rules. The supporting org tests and what they mean are the topic of another episode. It takes far too long to explain for a basics episode. So that's types 1 and 2, the charities that are categorically described, churches, schools, hospitals, and certain governmental units, and supporting orgs. Then there are the mathematical tests that use the breadth of public support for one type of public charity or exempt function income for the other. to meet a standard that indicates that the organization is responsive to the public interests. Again, same policy objective rather than the interests of a small number of funders. So here's where it gets pretty complicated. There are two different 1/3 tests that you'll hear about that can be used by an organization to establish that it's not a private foundation. Well, I don't expect that most listeners want the level of detail here that includes cites to the Internal Revenue Code. I'm going to refer to the code sections anyway, because both of these mathematical tests involve a 1/3 test, but they measure different economic threads because they're aimed at different types of organizations. The founders of a new organization that intends to be a charity will need to indicate in their application for exempt status, either the 1023-EZ or the regular 1023, which classification they want. So of these two categories, one is more useful to organizations that operate charitable functions that generate financial support from service fees or sales of items, as examples, as part of their exempt purpose and function. So think about museums, performing arts organizations. Those are good examples. These organizations are described in Internal Revenue Code 509A2. So the requirements for A2 category are somewhat complicated. But in general, boiling it down to this simple high-level objective here, charitable organizations that meet the following two requirements are described in 509A2. First, they have to normally receive more than 1/3 of their financial support from either gifts, grants, contributions, and membership fees, and gross receipts from their admissions, sales of merchandise, performance of services. So that's the 1/3 part. There's an exception, though, to this gross receipts number that I want to mention, and you'll see some details about this in the show notes. So don't try to capture it all as you listen to me. The gross receipts don't include receipts from an unrelated trade or business, and they also don't include support over $5,000 or 1% of the exempt function income in the numerator of this 1/3 support test. That's part one of the 509A2 test. I know it's complicated already. There's a second part of A2 that has to be kept in mind as well, and that's that the organization has to normally not receive more than 1/3 of its support from gross investment income. There's a investment income test and there's a public support test. And that public support test, in summary, includes their exempt function income, their admission fees, sales of merchandise, services, performance, and so forth. So that's the 509A2 test. It has a 1/3 support test, and it also has a limitation on support from investment income. Now, the other 1/3 support test, and this is where the biggest number of founder-supported charities falls, is the 1/3 support test in 170B1A6. And to us tax geeks, that means a lot. But for purposes of the listeners here, just keep in mind this is the broad public charity 1/3 support test for organizations other than museums and that sort of organization. This rule applies to an organization that normally receives a substantial part of its support, other than income from their exempt purpose, from a government unit or from direct or indirect contributions from the general public. That's the statutory test. So let's dive a little deeper into what that means. Unlike the other 1/3 support test that I just described a few minutes ago, that is the 509A2 test, under this test for public charity status, the organization can qualify as publicly supported under this purely mathematical 1/3 support test that I'll talk about, or under a more generous and flexible facts and circumstances test. So the 170B1A6 1/3 support test applies when public and governmental contributions amount to at least 1/3 of the total support over the measurement period. In determining the extent of the favorable or good support, that is, the numerator of the 1/3 fraction, donations from any private source may count only to the extent of 2% of the total support. So this is where it gets complicated. Basically, you look at each contributor, whether that's a corporation, an individual, a private foundation, and you look at the amount that that donor has contributed and compare it to the total support. If that founder contributed more than 2%, you ignore the excess over that 2%. So the first step in determining whether our new charity meets this 1/3 support test is to calculate the amount of total support. Total support includes certain investment income, government grants, and individual donations. However, unlike with the first test I described above, exempt activity income doesn't count either way in the numerator or the denominator. The second step in this calculation is to determine the amount of public support. Government grant support counts 100% in the numerator, as do donations from individuals that don't exceed this 2% threshold I mentioned a minute ago. The notion of public support perhaps implies a much greater population of contributors than is really necessary to satisfy the public charity test under this one-third support test. Even where there's no government support, commitments from at least 17 unrelated individuals, each of whom contributes 2% of total support on an ongoing basis, will guarantee qualification. And this is because 17 times 2 is 34. That's 34%. You're magically over the threshold. So you can ignore all that complicated stuff I just said. If you know that you're going to have 17 donors at the 2% level on a regular basis, then you're golden. So that's the easy way. I could have just said that at the beginning, but then you'd miss all the fun. So for new organizations, sometimes even one knows that eventually you'll get to that magic 17 donors, but it may take a few years to get there. 170B1A6 has this lovely facts and circumstances test. This one's the fallback for these usually new organizations that intend to meet the one-third test, but it may take a while. When qualifying under this category, the organization has to demonstrate that it meets 5 other facts and circumstances, and that allows the IRS to approve them as a public charity with as little as 10% public support. Or back to my easy math, at least 5 donors that give 2% per year. So if you have at least 5 at 2% and can meet the 10% test, then these are the facts and circumstances that you'll need to demonstrate. First of all, the first factor is percentage of public support. Obviously, the closer to 1/3, the better, and the further from 10%. So 10%, you're really going to rely on the other facts and circumstances I'll get to. If you're already at 25%, you're moving in the right direction, and these other factors may not be as critical. So here's the other 4 factors that are looked at in this subjective test. The next is attraction of public support. That is, the organization can show that it operates to attract new and additional public or government support on a continuous basis. If the organization has an active fundraising program, that's a great fact in support of the facts and circumstances test. Next, the breadth of support. It's obviously preferable to develop support from a lot of different sources rather than just a few families. Next factor is a representative governing body. The board of trustees or board of directors, which includes representatives of the public or community interests, is a really good fact. Obviously, having a broadly representative board is useful for fundraising purposes anyway. The next factor is that the organization provides public services and includes participation in the public life. So, for example, a charity that furnishes facilities or services, for example, a regular schedule of educational programs, has a good chance to qualify under this rule as a public charity if it's able to generate the minimum 10% support that's required to reach the facts and circumstances determination. So there are a couple of key differences to keep in mind when thinking about which of these 2 public support math tests is the most appropriate for a new charity. Keep in mind that there's a special limitation under the 509A2 test. That's the first one. Public support for these purposes is calculated differently than under 170B1A6. Instead of excluding the amount by which the gifts from disqualified persons exceed 2% of the organization's support, this test excludes all gifts from disqualified persons. The primary basis for classification as a disqualified person under the rules is reached by any person who has contributed more than $5,000 to the organization. Once substantial contributor status applies to a donor, that donor is always a substantial contributor for purposes of this test for the life of the organization. Also, it's important to keep in mind that there's no 10% fallback test under 509A2. You either meet the 1/3 test or you're a private foundation. So again, this is complicated stuff. In the show notes, I'll have links to some good examples so that you can parse through which of these approaches works better for your organization. Let's talk just a little bit about planning strategies for a new organization. A new organization that wants to be classified as a public charity has one initial differentiating question when deciding between 509A2 and 170B1A6. And that question is, how much financial support is expected to be generated from exempt function income? Many organizations qualify under both of these one-third support tests. If you do expect to qualify under both rules, it's usually more advantageous to ask for classification under the 170B1A6 rule. But an organization that normally will receive almost all of its support from the performance of its exempt activities and only an insignificant amount from gifts, grants, and contributions will instead want to satisfy the 509A2 requirements. On the other hand, if exempt function income is not the basis for the financial plan for the new organization, then it should really focus on a fundraising plan and governance design that will work towards satisfying as many of the facts and circumstances as possible, with the objective of qualifying under either test of Section 170B1A6, that is, the one-third test or the 10% facts and circumstances test. When soliciting support from contributors, fundraising efforts should concentrate where possible on government support and grants from public charities, all of which will count as good public support, and as to which the 2% limitation doesn't even apply. Another thought to keep in mind when soliciting contributions from individuals or private foundations, the fundraising team should keep in mind that to the extent any contribution exceeds 2% of total contributions, that excess isn't going to help in meeting the required public support fraction. Finally, if the new organization has a substantial endowment, it may be advantageous to limit the amount of current income and focus on an investment strategy on growth rather than income, assuming, of course, that the other support is sufficient to meet the organization's operating needs. So, to summarize this really complicated episode, new organizations need to tell the IRS which public charity classification they want when the application for exemption is filed. This episode has covered the basic paths to public charity status to help guide founders as they set up governance, fundraising, and other financial plans to set the organization on the right path from the outset. For more information and details, see the links to related information in the show notes. Well, that's it for today. I'm Cynthia Rowland, and you've been listening to EO Radio Show, your nonprofit legal resource, brought to you by the Exempt Organizations Group at Farella, Braun & Martel. If you have suggestions for topics you would like for us to discuss, please email us at eoradioshow@fbm.com. That's eoradioshow@fbm.com. Thank you for joining us. Until next time, make a difference.